Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for February 6th, 2023. We are recording this at 1 p.m. Eastern Time, and this is episode number 375. And my name is David Kosmeter. I'm the creator of TimingResearch.com. And today I'm happy to welcome Sonny Harris and Michael Filighera back. So they were both on last week, and so we'll get an update from them. And the option professor is back to moderate. So I'm going to turn it over to him.
Okay. And we had great information last week, so I'm sure we're going to get some good stuff here this week as well, because obviously the world's changed quite a bit last week with that unemployment report. And so we're going to talk about what that might mean. Both you guys were looking for the stocks to go up quite nicely and then hit some resistance is exactly what happened. So before we get started, Michael and Sonny, let's start out with Sonny. Introduce yourself and let us know a little bit about your company.
Thank you. I'm a mathematician, trader, and programmer. I've been a professional trader for 42 years. I love to mentor, tutor, and consult and do one-on-one coaching with people who are traders and want to get better, or people who haven't started yet and want to learn. I'm an easy language programmer. I do custom programming for people, and I'm the author of 6 best-selling books, soon to be 7th. It's almost done. I do a newsletter every Sunday night called Sunny Side of the Street, and I have a live trading room on Tuesdays at 7 a.m. Pacific time. Oh, and I do 3 podcasts.
Absolutely. Okay, and Michael, a little bit about yourself and again, what you're doing at your company.
Okay. Hi, everybody. Michael Filighera here. I am the proprietor, owner, et cetera, of TradersHelpingTraders.com and also LogicalSignals.com. Through Traders Helping Traders, I have 2 channels on YouTube, and where I post daily updates on the S&P and the NASDAQ, so the S&P 500 future and the NASDAQ 100 future. Also, once a week, I am posting a big picture update, which, as Jim alluded to, was extremely interesting this week. The one that I posted actually on Sunday morning. So I look forward to maybe filling in some of that information today. And I have a trade room. I also offer coaching pretty much on the same basis as what Sonny discusses. It's like for people that are looking to improve their skill, looking to work on mindset, looking to work on a problem area, et cetera, et cetera. And I'll just leave it right there.
Sure. Okay. Well, let's get started with our question of the day. You know, we always start out each week with where the market opened, and I'm using SPX at 4118. So S&P 500 at 4118 is our start point today. And then where will we be on Friday? Always a nice little guest to have. And Sonny, where are you thinking? And why don't maybe you throw up your Sonny bands? We'll see where you're getting your ideas from.
Okay, I can do that. Somebody needs to unshare. There we go.
Yeah, you should be able to now.
Got it. All right. Last week I said I was 70% sure it was going up.
Yep.
This time, looking at these Sonny bands, this is the ES futures contract.
Mm-hmm.
And you can see it's given a sell signal here on Sonny bands. We had a blue bar above the green band and a red bar below. So I think we're going by the end of the week down to, what does that say? 40,
50 ballpark.
48 to 50.
Yeah. And then the last week you did think it would go to the upper band, which is exactly what it did. So that was a nice rally to catch there. And now obviously the winds of change have blown. So you're going to go with the winds of change.
That's right.
Yeah. And your confidence level is pretty good on this one, over 50 at least. Yeah.
Over 50. Yeah.
Yeah. All right, Michael, what are you seeing on your stuff? What are you thinking?
I'm thinking that this is, okay. I'll share.
It's good to look at the stuff you're looking at so people get an idea.
Yeah. So if I go over and let's just put up the S&P on the day. Oh, it's like I got a lot of stuff in here. Let me just kind of.
I would say you've got enough data there.
I've got enough fibs here to call the world. What is becoming more difficult, but I'm going to try. I've left open the possibility that we had one more run up Again, as we discussed last week, it went up and hit my resistance zone on the nose and then turned immediately off of that. So what I'm finding very interesting right now is that I've had to leave open the possibility it's going to go up and do another. So I base what I'm talking about, or even saying higher or lower now, on Friday's expiration, because that seems to be the ticket. And I kind of try to line up to where I see the open interest coming in, and it remains at 4,200. So while my gut tells me lower, I think that I also need to include that possibly prior to Friday, we do go up and retest those highs. So, but I am also going to be what everybody else is saying right now and say lower, but I'm only going to go 50% based on what I see the larger traders looking at.
Yeah, we've still got 50% of the S&P that's going to still report in the next 2 weeks. So you got plenty of news on the earnings front. And then you've got Powell and Biden talking tomorrow. And we've had a pretty good short-term sell-off. So some people do think on Wednesday or Thursday, people may stop the selling and bounce it a little bit. So that's pretty much consistent with some things that are going on out there. What's your confidence level on this kind of idea that we might bounce?
50%.
Yeah, 50%. Yeah.
Got to sit in the middle of the road on this one, unfortunately.
Yeah, I think again the boat got very, very tilted towards yields. We're going to keep dropping, the dollar's going to keep dropping, and inflation's going to keep dropping. And now after Friday's report, those yields have risen 30 basis points on the 2-year, back above 440. The what do you call it? The inflation, picture with all these people working and out there spending, the rough racket to get that down. And the dollar obviously is no longer at 110, 111 on the euro. It's at 1.7. So, a lot of the people who bought into this fever, or actually, euphoria, I would call it euphoria, that we saw in January, are obviously rethinking that, because what they bought in on doesn't seem to be there anymore.
Right.
At least temporarily. Okay, well, again, let's go back over to Sonny. And Sonny, why don't you put your stuff up there and the bands, explain the bands a little bit to people who are new here, and give some ideas on why don't we put some different indexes up there and see where they might go? Because, if you have a broad idea of where the S&P is, that tells you one of the bigger companies. If you have the QQQs, that gives you a decent idea on tech. And then, of course, you do IWM and you'll get your small cap big picture. So let's look at the 3 lead dogs here and see where they might be going. S&P, we already covered this. So you think it might be pulling back a little bit potentially towards that.
Well, it might not end the week down, but it's definitely in my study, it's definitely going to hit this DMA. So it's got a little lower to go. It could easily bounce right back before Friday.
Yeah. And then, like I say, it could bounce and then go right back down again. It could just be what they call a little bit of a short-term bounce.
Yeah.
Yep. Yeah. But it looks like the red boxes are in the control right now.
Yep. That's true. What do you want me to do?
Let's go to QQQ. That's your NASDAQ. And we'll probably look at SMH, which is all your semis. So here we go. So this thing really, it was up 15% in the month of January.
Yeah.
And by the way, the worst companies for profitability were doing the best. In other words, on the small cap stuff and companies that weren't making money, they outperformed the small cap companies that were making money in the month. So, that's a very speculative fever at that point. So anyway, let's see what you see on QQQ.
Well, we had a Sunny Bands buy signal that was activated right here on this blue bar. So it's been long all this time.
Mm-hmm.
And we had a gap up there that they're trying to fill. Now they've come pretty close to filling it, actually, right through here.
Mm-hmm.
And interestingly, this last bar, it's a doji bar. You can barely see it, but it is red. So that's a sell signal on the Sunny Bands. The Sunny Bands consist of 2 moving averages. They're my dynamic moving averages. And by that, I mean, they avoid most whipsaw, and unlike any other moving averages, and they calculate their own inputs internal to the code. So when purple's on top, I'm typically short, and when gold's on top, I'm typically long. So gold's on top, starting right here. So that's late, but the Sunny Bands buy signal comes in right there and is then confirmed.
Mhm.
So the Sunny Bands are 1.2 and 2.0 average true ranges from the DMA, dynamic moving average.
Okay.
And I read them when it goes down and under and reverses on blue, then I go long, and when it goes up and under, then I reverse on red.
Okay. So right now it does look like it's on the defensive a bit, eh?
It does. It looks like it's retreating a little bit.
It's trying to hold that 300 area.
Yeah, sure is.
But so if you're going to get a bounce, it might come out of the 300 area.
If you
But
come right there,
if it takes out the 300 area, there could be a little bit of an air pocket down towards 290.
well, let's see, the Sunny Band, the dynamic moving average is at
292.
292. So
Yeah.
that's what I'm suspecting.
Yep. So that gives you some parameters to work with, really, and that's what I think that's one of the best ways of doing the trading is create parameters and operate accordingly. You know what I mean?
Mm-hmm.
So what about IWM? That's well, before we leave, what about SMH? Those are all your semiconductors, which have gone nuts as well. Let's see if that seems to be
Exactly the
yeah.
same configuration as the
Yeah.
QQQ.
Yeah.
Little tiny red doji bar right there,
Yeah.
which, I mean, that could foretell a move back up because nobody can make a decision right here.
Yeah.
So it's really hard to tell.
Well, that's because it's confusing because, the economy, has some pretty darn good strength to it with that job market, and the services ISM jumped way into the 50s from 49, and new orders were up 15%. And so there's a real, but of course, why would we be surprised? I mean, you got 3.4% unemployment. And while wages are not accelerating, they're certainly not going down. It's still a plus number.
Right.
And people spend money. I mean, that's what
Right.
people do. They made a big joke. You never stand between a U.S. Consumer and a cash register, or you're going to get killed. So, I mean, like I say, and they don't care what the credit cards are, apparently, because the credit card usage is coming up at a record. And I see the rates that they're being charged, unless they pay it off right away, which is possible. Yeah. So the economy, as far as that kind of stuff, looks extremely strong, yet the earnings are getting pinched because of, even with inflation making the revenue higher year over year, the actual earnings peaked last year because the expenditures to get the earnings obviously is squeezing the margins. So you got the earnings coming down and margins increase, squeeze going on, but then you've got these people all working and spending. And then, of course, the wild card is you got 1.4 billion people who haven't gone anywhere in 3 years over in China. And, they're trying to figure out what that's going to do as well. So that's why I think there's some confusion here. And it'll be interesting to see. These yields don't seem confused anymore, though. They seemed like they were trying to rise again. So, and everybody was selling bonds, Michael, don't you think, on the TV and everything? Buy bonds, buy bonds, buy bonds. And so
they were. I think they're now exiting all those positions pretty quickly.
And they also were killing the dollar. The dollar's going to go down. Dollar's weak. Dollar weak. Dollar weak. I mean, the euro long and the long bond market, was extremely popular going into last week, right?
Yes, I have a couple of things. If we're ready to switch over.
Yeah, let's look at one last thing with her with
Okay.
Sunny on the IWM, which is your small cap, because I got some small cap and mid cap ETFs that have just gone nuts in the last month.
Got
People
the
are
same sell signal on this one. Blue bars went outside the upper band and red bar came back inside the
Yeah.
upper band. So
Yeah.
we're going down to this DMA. And if you look, can you see where the cursor goes horizontally over those prices back in here? See these prices? That's where we're going. And that's right at the DMA. And it's what I call an attractor, which support, resistance, moving averages, Fibonacci lines, all those things attract price to them. I think that's where we're going.
Yeah, because this statistic that I heard today was that the companies that are small cap and losing money outperformed the small caps that are making money by the largest margin on record. To me, that sounds speculative.
I would agree with that.
Yeah, I mean, when you're buying up the companies that are losing money at a much faster on a record basis more than the companies that are making money, somebody's gambling.
Yes, everybody's gambling.
And like I say, with the trend, with the thing going up like that, and then that red box, it might tell me that that gamble is at least over for the time being, huh?
And I had dinner with friends on Saturday night, and they were saying, we're going to buy more stocks. The market's going up again. We're buying.
Yeah.
So
now, like I say, a lot of the moving averages are under the market still. So obviously you can't fight that technical condition. So, you know, if we were under 39.50 on the S&P, I would definitely change my tune. But if you're above it, it can get choppy as it's trying to hit a high point, because, you know, like I say, there's this cycle that I was seeing, presidential cycle that goes from the end of the October of the second year of the presidency to April of the third year. This was put out by Jeremy Grantham, who's a pretty sharp guy out of Boston. And he says, and I went back and tested it. And during that period, if you got in October and got out in April, it was up just like about every year going back. I went back to 70. So that's a pretty good history of that cycle working pretty good. But we're getting to the end of that cycle closer than the beginning, right? Because we're going to be in February, March here right now. Michael, why don't you put your stuff up there and share what you're thinking?
Okay, let me get this chart up. What I did over the weekend, and just basically what happened when we got that employment situation data and the market reaction, and we saw the dollar and we saw the bonds. Prior to that, my problem in trying to group it all together, first, just very quickly, I have what I call my pecking order. And at the top of the pecking order is interest rates. Interest rates control everything that we do, because it's how much what it's going to cost you to borrow money, what's going to cost you if you're lending. So what you're going to get if you're lending. So interest rates are in control of everything. And then underneath that, we have treasuries, we have the bonds. And then underneath that, we've got the currency. Then underneath that, we got corporate, which to me is our markets. And then last on that list is retail. So everything will drip down to us last as retail, you know, folks out there in the world. But if we start back at the top, the big change that started in interest rates when that number came out is like, oh, we're not going to go, you know, the yields are not going to continue to drop. The Fed's not going to pivot. Boom, up go the yields. The dollar next down the line. Boom, we're going to buy the dollar because I'm going to get more interest for my dollar. They follow it all the way down. You're going to now see, okay, what comes next? And then finally you get equities, which should be declining, which they did. What stands in the way of the decline, as we had last week, as you mentioned, Jim, a lot of people say, hey, everything's looking great. We got a great economy. We got this, we got that. And the thing is, it's like, stop trying to be 6 months out in advance of the market, because what's got to happen before that is we have to continue to filter through to see what's happening in the interest rates now. Now, my thought process is, and I'm just going to put up the 30-year. And the 30-year bond, we did on an Elliott basis, I'm going to go one more up and I can show you. We did 5 waves down, right? So, and this is actually the real high for the bond prices. This was a one-off type of just throw up that happened during COVID. But here,
that's like a 0.5% interest or something like that, which is obviously
like
a big joke. Yeah, that was the cyclical bottom, grand cycle bottom. Yeah, of
Right.
rates, grand cycle type top of the price. Yeah.
Right. So we got right there, and that's where the 30-year bond lowest rate was 1.17.
Right.
So on a bond price basis, we've gone down 5 waves. So what comes after 5 waves on an Elliott basis, you're going to get a 3-wave counter trend rally in terms of bond price, a counter trend decline in terms of yield or rate. So if I flip this over to the 30-year rate, then we're going to see all the opposite. And we're going to see this incredible 5-wave rally, not a decline. Let me just go over, I can do that.
So you're going to switch from the price to the yield, actually.
I am.
Yeah. So that's easier for people to understand anyway. They know.
So as
there
you
you
can
go.
see, and if I bring it just even, I think I can get it to where it's a little bit cleaner and not necessarily that. Yeah. You're going to see that here is the yield. The yield did 5 waves down. Right. And that takes us all the way down to, we had that 5 waves up in the bond, and here we have it. So this is equivalent to what we saw in the bond price sitting up at the top in 2020.
Right.
Now, so we've reached that low here, and what have we done? 5 waves up. Right. So for us, for the yield, it's higher rates. Rate is running higher. So now what we're doing, now that we've done the 5 up, is we got to have 3 down.
Right.
What that also signifies, and this is the important part. So we're now in the internal part of this. Now I got to bring it off of that monthly so we can see it. It's hard to see, but see, we're in the internal, the A, the B, and we're going to do a C wave. So I'm looking at the potential that what we're going to fill in here is that the yield's going to go back up, only to just finish the move, and then we will return to a period where, see, this is the A, the B, the C, and then we're sitting in the B wave, which will take us up, and then we have another C wave down. So I'm still thinking we got it out there. Now I'm going to just quickly go back over, so because it makes more sense if you're looking at bond price. And I know,
Yeah, but like I say, I'm familiar with the yield. So I'm trying to just, get to the cliff notes of this a little bit, in that, you think right now we went down to whatever we did, 340 or whatever on the yield. And now we could go up and do a little bit more
back to 4,
back up towards
to
4.
like back to 4.
But you think something will cause the yield to go back down again before it goes back up?
Yes. Yes.
So more like go towards 4, like, we went down towards 3, so let's call it 340, and then we're now going back up 360 or whatever, and then it might go up towards 4,
and then we're going to drop back down to that 3.5 level. Yes.
Yeah.
So it's going to end up being what I would term a big flat. The highs and the lows are just going to form a box.
Gotcha.
And then eventually what takes over after that. So and here's the bond, the 30-year bond. I think we get down, that was the low. So if it's a perfect flat, you're going to see there was the first, there was the second leg. Now we're going to come down in a C wave. We're going to come back towards 124.11.
Okay. Yeah.
And then once that's done, then we got bond prices moving up, yields down for the second round, and that finishes the larger ABC. And once that's done, then we get the real nasty. We get the second 5 waves down and bond price up in yield.
Right.
So that's still hanging out there. So what people are kind of getting worried and excited about now is just not really the drop that I'm looking for, unless, it can be, but it's going to have to slam through 124.11, and in terms of the 30-year bond. Now we're already seeing a massive move in the 2-year. You mentioned that before. That 2-year is looking. Look at this.
And the inversion went into the 80s too. So the inverted yield
Right.
curve is even more. We do have a CPI report. People should note this. CPI comes out on February 14, which would be a week from tomorrow.
About a top.
Yeah. And
They're
so,
talking
so what you're
in the
saying,
market.
we could see the yields go up, and maybe on the 14th, if CPI came out with a very accommodative print in the 5s or something on the consumer prices, that might be very helpful to the bond market, and that might be what make yields drop again.
Yes, and throw a bond price, putting in a nice rally. See here again, in the 2-year, we're already there. We're already at the bottom. A, B, 1, 2, 3, 4, 5. So I'm looking like we get down to 102 in the 2-year note, and then we start the next rally.
Right.
That's in bond price, folks.
Yeah, no, the yield's back down.
Right.
Yeah.
So, and that will coincide with, a better an improved number in CPI again, so blah, blah, blah. Inflation is under control, et cetera, et cetera. So
Yeah.
we'll go up, but then that just sets the stage for the next slam dunk.
Yeah.
So
No, because this 9% inflation going down to 5 or 4 is going to be what they call the easy wood to chop. And then the fact that the unemployment rate is 3.4% is going to make it very tough to go anything
Right.
under 4.
I agree.
And so that means Fed fund, that probably means why Fed funds would have to go into the 5s, because at some point Fed funds has to get above the inflation rate.
Right. And I think what becomes confusing, Jim, and you started to mention it, it's like having people understand, it's like, well, I thought people going back to work is a good thing. It is.
It is,
It is
but it's not going to kill inflation.
Exactly correct.
And it's not going to cause a recession.
Exactly correct again.
Yeah.
But it is going to cause, it could tip our scales and throw us into a deflationary period, i.e. what we saw in 2009. Where we got this massive deflation going on. And again, that's going to be triggered by something as it was then. It will be triggered by something again. We just don't know what that's going to be. Because
Goldman Sachs today announced that they don't think real estate is going to drop that much in most regions of the country, particularly the Northeast and Mid-Atlantic. Right. So if real estate doesn't bend, you're not going to get much of a wealth effect feeling. And obviously, the stocks are coming back pretty good. And if we do get a drop in yield, that could light the fire under this tech stuff again and cause more of a speculative boom. So, that's
mind you, the one thing you did mention, and you just gave a one sentence on it, consumer debt.
Yeah.
That's out there. And we know these cards are charging 30% and more.
Yeah.
Unless you're top
unless they pay it off. And since they're working, they might be paying them off.
I agree.
Yeah.
I agree. But as things tighten up again.
Yeah.
So again, we can't forecast out in the future exactly what it's going to be.
Right.
Because as we discuss here, there are many economic things, but there are many geopolitical things still sitting out there unresolved.
There's going to be a big spring offensive by Russia.
Amen. Yeah. There you go. How do we know?
You never know about these Chinese weather balloons.
Yeah.
That's
well, they
true.
certainly they didn't take the shooting down of it very well. So
no, they didn't. They wanted it back.
Yeah.
Yeah, I'm sure we need to investigate what was inside the thing. What are they spying on?
Yeah, when people hear balloon, they think it was air in there, and there obviously was all kinds of stuff in there. That's why they didn't want to shoot it down and spread the debris all around the homes of Montana.
Right. And South Carolina and Texas.
And Texas, right?
I got gold up, Jim.
Yeah, I just wanted to mention, we talked about that possibility of going down towards that gap between 1825 and 1845, and we lost $100 in gold last week, so that wasn't a bad
2 days.
Thing. Yeah,
in 2 days.
Yeah,
and
those gaps are attractors,
They certainly are. They truly are. And the thing is, it's like it surprised me. And now it doesn't necessarily break the count, although I did switch it around. And what gave me the hint, folks, is silver. If you remember, Jim, when we were talking about silver, I said I'm really in a quandary as to why silver's not catching fire, because the initial thing out of that was this big 3 up. I thought, well, that doesn't look very good to me. But then it did this. And I'm like, okay, so this presented itself as a big X wave. So in other words, it did another ABC. And now we're likely going to start coming down. Now, it can save its hide by not dropping below that and turning around and going back above 25.
Right.
But I don't necessarily see that. I think the pressure is on the metals right now. And so
you got two good lines in the sand, Michael, 1975 and $25. Those are very good lines in the sand, because if they start exceeding those levels, it could be, happy days are here again in a big way. Huh?
Yes, there you go.
Yeah. I mean, people who want to buy into this stuff, they want to probably get in there because they think a big move's happening. I think most people who buy metals, either they're holding it on to it because of some, asset tangibility thing, or they're thinking the prices may explode. Well, the prices can't explode unless they get above 1975 and above $25. But if they get above those two levels, you can see there's a lot of black hole up there. And so there's nothing to stop it if it starts going through those numbers. And then if you have a reason for it, then you've got quite a bit of quite a bit of activity. And it still doesn't seem to be an over-owned asset by any means, right?
My
True,
chart shows
but I'll
two.
tell you, but I'm sorry, Sonny, but who's continuing to jump and buy this? And that's central banks.
Yeah.
Not just China, not just European Central Bank, not just the Bank of Japan. We're talking central banks across the globe are jumping in and they are buying gold.
Yeah.
So I think that they stepped in, and the sell-off had its reasons. The dollar going up 100 pips, on Friday, that helped. That helped switch a lot of things around. But gold can save itself here, or we've just opened the door again. If it starts to break down, and again, your lines.
Yeah, it's had a big run. I mean, that chart speaks for itself. It's gone from 1700 up to 1950. So it's not like it's on the bottom anymore. So
Right.
it will have some pressure to keep going. Sonny, you had a comment on the gold. Let's let Sonny get in here and give her ideas.
Sure.
I have two really strong attractors on gold, one at the top of the recent move and one just down below where we are right now. I don't think we're going much further down. The one that's right below current price is very strong from December forward.
Sonny,
go ahead and show your
you can
chart
share
if you
again.
want.
Oh, that's a good idea.
Yeah, then we don't have to worry what's in your mind. We'll
You
see it.
can't read minds.
I can't read minds.
Well, here's the two attractors. There's an orange line right here, and an orange line at 18. So we've got one at 1963 and one at 1848. And I think that 1848 move is almost done.
Yeah.
I think we've come down close to it. Here's a blue bar that's trying to get there and hasn't quite. I think as soon as it hits this attractor, and which coincidentally is the bottom Sunny band, I think we're going back up again.
Yeah.
That makes it. Then in an Elliott basis, that would make what we just saw, that drop off in 1975 would be a fourth wave. We run up on a fifth and then do another correction once we're up there. But I think that could be the move that would take us to 2000. Now,
Yep.
again, what's going to be the underlying force behind it is anybody's guess. But what I wanted to add, thank you, Sonny, very much for that, because it adds just to the total picture. But Jim, I think it's important for people to know that gold does give a return. You just have to know how to do it. And there are so many different ways to actually trade gold by using GLD and the GLD options. And so I want to toss that out there, because I think that, Jim, you might get a lot of questions, people coming to you saying, well, how do I do that? So I just think it is something that people that are offering how to do things need to kind of be aware. There are a lot of stuff that can be put together in gold and silver. And so, you can do things, the whole name of the game is tapping the power of gold to build and protect your wealth. That's the whole gig.
Mm-hmm.
So I just need to put that out there, because I think it's important for people to realize it does, and it can provide a return. You just need to get in touch with somebody who actually knows how to do it.
Yeah.
It is a little bit more complicated, and it does require.
Yeah. I mean, you've got, when you get a move from 1700 to 1950, the premiums are going to be kind of big. So you have to be careful that way. And then, of course, when you're buying these coins or whatever, there's big premiums on those as well. So, sometimes I gravitate just to the equities on it, because obviously if gold is going to go through the roof, many of these equities are going to have a leverage, because, they are leveraged to the price of gold. And, there's a big drop in Newmont Mining today, NEM, for those guys watching, because they are trying to buy this Australian company. And it's a $17 billion purchase, and that'll get them into copper as well as the gold. So on a longer term basis, if it works, that might be very helpful
nice
to Newmont. And Newmont does pay 4 or 5% dividend. So it's something where you hold on to something that's gold related and you get income off it at the same time. It did, when I was keen on it last year, it did go up all the way to almost 90 from 30. So obviously I like that one. But since then it's been on the defensive quite a bit. It was kind of a bargain at 40 for a little while, but I'm monitoring that now, because right now it's a situation where if they get this company, they're going to be a heck of a group.
Right.
But the moving average is the 50 days at 49.5 and the 200s at 52. So it's still got a negative vibe to it. So I'm more monitoring it. I think if it starts closing above $52, that would be the sign that whatever's going to happen is going to be, pretty good. So I would use 52 and 49 as areas where if it gets above that level, it would become much more interesting. And then again, if you can get into something that pays you 4 or 5% on your money while you're holding it, plus you've got a gold and copper if they get this place, that's not the worst place to be looking out.
No, and that's why I kind of brought it up, because I wanted you to put in all what you've just said.
Yeah. So like I say, I mean, and that in my view, it's the Cadillac of it. It's one of the, if you ever look at any gold funds, Newmont is always generally right in there at the top of the heap. So it is, in my opinion, the Cadillac of the metals, but it has not been good since it hit 90 and went all the way down to 45. So
is it cash and stock, do you know, or is it, how are they doing it?
I didn't exactly get all the details on it. All I saw was 17 billion, and I saw the word copper. So I can see A, they're trying to corner a lot more supply, and B, they know this copper's got a very bright future because infrastructure is going to be a big deal looking forward, and also these electric cars. And copper, is being run by Peru and Chile, not exactly the most stable resources of supply.
Right.
And so the next thing you know, if you get a whole bunch of demand for copper and you got some guys in Chile and Peru, who work 3 days a week or whatever, you could have a squeeze on supply demand there. So that's looking forward. And of course, Freeport McMoran's the Cadillac and copper as far as I'm concerned too.
Great.
But yeah, let's go back here to the markets on some of the other stuff, because I think one thing we should talk about is energy, because in my work, crude oil has very, very important support at 67 and 68, that if it holds, you could be looking at the low that you're going to see. And then on natural gas, the darn thing went from 10 down to 230, which is almost an 80% drop in price. So why don't we get your opinions on both of those two areas? Because the vibe out there is that, the demand on natural gas is going to pick up dramatically as we look forward, and that's going to be bullish. And the LNG that China needs, and China is 15% of world demand for energy, and they're going to really expand it. So some people are saying, LNG demand, which would be Cheniere Energy, and another one, and those ones that deal in exploration and development on the energy front might be quite good. So you want to start out and look at crude oil, Sonny, and then we'll run over to Michael and get his view.
Okie dokie. Crude oil is going sideways.
Do you see, where's your green line? Come in around 67, 68 down the bottom?
71.97.
Okay. I was looking at a 20-year graph, so it's a little longer term,
Okay, well, we can do that. Let's look at a monthly. Just that's as far out as I can go. Oh, we're on the monthly. We're right at a flat DMA, which is telling me exactly what I just said, that it's flat. It's sideways.
So you're really at that 70 mark, somewhere 70, 71 is really where your important stuff is.
Yeah. And if it continues on down, if it breaks below that flat DMA, it's going down to.
Oh yeah, you got an air pocket.
56, yeah.
Yeah, you got an air pocket. And hey, listen, anything can happen in these markets, as we all know.
Oh yeah.
Yeah. So what about natural gas? How are you seeing that? I mean, that's got to look
LNG.
Pretty, yeah. No, I don't know what the symbol is. Can you?
At NG, I think. Yeah.
Yeah, and this is on a monthly as well. So can you see we're
going on down to the bottom band then at 67 cents.
Yeah, I mean, that's unreal. But can you see, you want to talk about a reversion to the mean potential? Is this thing screaming out a potential reversion
to 6.022?
Yeah, I mean, this is again.
We have to all get rid of our gas stoves, so.
Oh yeah, California by 2030, right?
Yeah. I'll get. Well, and I have a gas stove.
So that I
put in a couple of years ago.
Could that ever be overturned?
No, we're going to have some more research.
Because I mean, this idea of going everybody into electric cars certainly is a lot longer runway than they anticipated. So
Mhm.
maybe the appropriateness of ditching natural gas is not an appropriate thing either. So they want everyone to go electric, I guess. Is that what they want to do?
They want us to do the magnetic induction energies things. So
I
we'll
got
all be magnetized, but we'll be able to breathe.
Glow in the dark, Sonny.
I already glow in the dark, Michael.
But
Yeah,
that is
man.
a state thing. And if new people came into the state, is it possible, new elected officials, is it possible that could be moderated?
Oh,
It is.
anything can be moderated until it's law. And then even then they can file lawsuits against it. And,
Yeah.
this could
Right.
go on for many years.
Right.
But this does
I
give
think
you an
it's-
idea. This does give you an idea of a reversion to the mean potential that is
think it's-
very, very significant.
I think it's only on brand new stoves, right? They're not going to force people
They
to.
want, as long as you're grandfathered in, if you don't buy
Yeah.
a new one. Yeah.
Oh, I got you. So if you went to Home Depot and bought a new one, it's going to have to go with this other new energy source.
Right.
Now, why don't we put up LNG? Because that is, the big one for Cheniere
Right.
Energy.
Monthly, or you want to go back to daily?
Well, let's go to monthly just so you can see on the monthly, it's right on support there, isn't it?
It is.
It is. It's right there at the flat DMA again, as this is indecision time.
Oh, yeah.
Oh, is it going to go up from there or down? It's hard to tell.
Yeah, I think both
I think
oil and
down.
gas that you showed us is they're either going to hold the 70 ballpark area on crude and this natural gas is going to hold this 230 and have a reversion trade, or it's going to go into the abyss.
Yeah.
Which is a great place to start, thinking about it, because, every time I've seen anything that gets extremely overdone, like Freeport McMoran when it went down to $8, and it's something that people need, like copper. We're not going to never use copper again, right? Sometimes you get a tremendously interesting buying opportunity. And so it wouldn't surprise me if this could be that. And at least since you're on the support, you could cut and run pretty fast afterwards if in fact it didn't work. You know what I mean?
Mhm.
Yep.
So
I just watch when it gets to a flat DMA like this, I watch price action very closely.
now let's look at the three forms of the three forms on your stuff, and then I'm going to flip it over to Michael. Let's look at XLE, XOP, and OIH. Those are the three formats, the three ETFs that are energy related. So
here's XLE. We have a slightly upsloping DMA, and we have gold on the histogram and gold on the who's on top dots. So this, as opposed to those other things, this is actually looking like it's going to move up.
So 84, $85 should be the floor on that if it's going to be any good. Otherwise, you got the air pocket down into the
and
70.
94 up near the top.
Yeah. Yeah, my view has been it has to get above 83 and 93 if you have any real substantial potential, and that view has been pretty well kept you out of the water on this. What about the next guy, XOP, which is I think the exploration people.
And that's interesting because we're moving down on that one.
Uh-huh.
So with purple is on top now. The purple DMA is on top, which signifies down move coming.
And then to reverse that, you'd have to get above 140.
You'd have to get above the DMA at 140. Yep, 84.
Okay, so basically on the XOP plus 141 would be an indicator that maybe it's turning a little bit.
And then got an interesting trend line here that's sloping down.
Yeah. And what's that green one that it's almost hitting right now? That midpoint, is that?
Right here?
Yeah, that comes in around 130.
That's the lower inner band, and it's 128.19.
Okay, so that's a good number to people to keep a little eye on too, because you'll notice that it goes to the middle of the interband quite a bit, and then it moves out of there.
And that just shows a weak move.
Yeah, so that's a good 120.
It could go there and bounce very easily.
Yeah, above 141 and under 128. Those are the parameters to definitely keep an eye on as far as the bands are concerned. And then you got the reversion to the mean potential again.
Exactly.
Now you got, those are the exploring guys. Let's go to the servicers, and that's OIH. those are going to be, I think, your Baker Hughes and your Halliburtons and those kind of guys, Schlumberger.
And we've got a sell signal on that. Even though gold is on top and the DMA is sloping upward, we've got a little sell signal going on here. We've got red on the histogram.
Okay.
It's likely we're going on down to 284.
So the Exxons and the Chevrons have had a correction. The exploratory guys, they've had a correction. This one has not had the correction.
And
but
what
it
is
looks
this
like
one?
this is the servicers. They are the Halliburtons, the Schlumbergers, the Baker Hugheses of the world.
Okay.
And they have been hesitant to come down, to be honest, as you can see. They have been hesitant to come down. So it's possible that midpoint band there may hold water. Where's that midpoint that's kind of holding on right now? Is that about
284? Oh, right up here?
Yeah, where are that? About
315.77.
and 315. And then other than that, it looks like a 290 deal, 285,
Yeah,
290. Yeah.
right in here.
So that's not bad parameters either. All right, let's switch over to Michael and see what he sees in the energy market. Because, there's not many sectors that look like they're undervalued or whatever, or near the lower end. Everything has gone through the roof. And people have forgotten the energy trade a little bit here. So it'll be interesting to see if there's real value here or not, right?
Yeah.
Because there is a lot of people who are not the dumbest guys on the block who are still telling us that by next spring, you're going to have a much different energy picture than spring and summer is going to be a lot different. And this China deal is going to be a lot different. So, this stuff is on sale right now. And
It's on sale. I like that. It is.
That's when I come out of the woodwork,
We've pulled into strong support, which is that 72 area. 70, 72. And next up is right on the nose. Didn't you say 62, 63?
Well, I was actually in the 67 area on my stuff, but I think if it starts breaking under 70, you're probably in trouble.
It could,
Yeah.
but I agree with what you're saying as well. Because normally what I would say is when you get in between these two fibs, and the structure itself then becomes the dominant force that's going to tell you when you're getting a low. So again, if we're just counting from here, first 5, that's the intervening, and now we're into the second. And so I think this coming off, we likely have one more little downswing to do, and it should pull in below 69.90. But I would say anything below there, as long as you can be able to count down on a daily, or even if you're going to come down and work off an hourly chart, see, that's even more convincing. You're going to be looking for the 5 waves. And so these declines are beautiful. And this is just a recovery. So I agree with that, but I think that is then the time you step in and you start.
Well, I like the RSI right here. I mean, you got a much lower RSI when you were at 73, and then you went down to 72.34, and that's a much higher RSI. So that's not a bad sign, because that gave me the sell signal last week on the stock market. Is we had a high point, and then we had a rally back to the high point. RSI differential was like 74 on one, and then 56 on the rally. When you see 56 against 74, that's a divergent, buddy. And so that was around 42.08. So that's I like this divergent stuff as far as turning points are concerned, because it kind of gives you an idea of exhaustion.
Right. And I think we're very quickly approaching that level. Natural gas now, this is the tricky one, but I do agree with what you're saying, Jim. I don't think we drop out of the sky on this any more than we already have. But that decline has just been fantastic. Now, if we just look at it cyclically, and when do producers, or just, the large users, when they come in to collect inventory because they need to get ready for next year, for the balance of this year.
And the air conditioning season of the summer.
So they start buying March, April, May. And when you start to look at like when do these things top out? When do they top out? They top out July, August. You think like, okay, what's going on? And then here we're now moving into winter, and now we're definitely in winter, and it's cold.
Yeah.
And
but they're saying that the cold snap in Europe is going to mobilize a lot of this stuff, and over in China, I guess they've got boats or whatever out there waiting to deliver stuff. So it could change the dynamic. I mean, I listen, like I say, it's obviously a very negative looking chart. The only idea here would be is this a product that is going to, get in bigger demand? And is it a situation where, there's a reversion rally potential? And there's a possibility of saying yes to those two things.
There are definite possibility of saying yes to both of those things. And that's why I think it's like, I don't know if I'd be stepping in and testing the waters here. I think I would want to see some evidence that, buyers are back.
Yeah.
And again, because it's the commodity, because it's natural gas, it's not that it's like we're buying the stock because we think it's going to pay a great dividend, or we're buying the stock because we think it's going to go up. You're filling inventory here.
Right.
And if you're going to go in and trade this as a day trader, position trader, whatever, you got to make sure that you're going in at the right time. Now, because a lot of people get confused, they would say, oh, Europe, China, cold spells, they should be buying natural gas. It's like they already have it.
And also, does this scream of commercial hedging? In other words, when you go from 10 to 6, then 6 down, it sounds like every Tom, Dick, and Harry who's in this business is hedging something.
Right.
And if they lift their hedges off, who's going to be left to sell?
Nobody.
Yeah. So in other words, that's another factor that I'd be thinking about as well. Now, like I said, like Sonny says, this thing could go to 50 cents. And, obviously that would be creating historic prices. But, when you buy the companies that are in this stuff, then you're looking at them, what's their profitability at certain levels and what's the demand for their product. The actual speculation on the futures contract is a very rough racket because this stuff moves so fast and the leverage in it is so great that the average Joe trying to trade natural gas is in for a pretty wild ride.
A rude awakening.
Yeah, a rude awakening.
Yeah,
and I think it's
is.
also a limit up, limit down kind of deal where, you wake up one morning and it's going limit down and, you can't get out and this and that. So, if you really want to avoid, that type of leverage and nightmarish thing, looking
Right.
towards the equities is sometimes what people try to do.
But I think here it's like this monthly chart. That's not a nice chart. That's a very bearish chart. Even if we look at here, that's up, there's down. We maybe get a little rally. We get another leg.
Yeah.
I think we got another leg down, and then it draws in $1.41.
Any Fibonacci numbers would be worthwhile to take a look at?
If I had to, I would kind of do as follows, and we're just measuring downside. Right now, look what it did.
Yeah.
It came down and hit it on the nose. Hit it on the nose today.
There's something in my stomach. You know what I mean? I could
So-
just feel it seems like something we should talk about today.
Yeah, exactly. I think you got a good point there. But the next one, I really, it's going to be a little bit harder to put in simply because I don't have that connection point. Like I'm putting in extensions, and if I need the upside move, I mean, we can do, let's just do one just to kind of give a thought process. And again, starting at this top versus that top, because I'm going to be looking for that fifth wave. So let me go here, and I'm just going to go here and then come back up, and let's come like it's maybe rallies back to 3.5. This is guesstimates, folks, pure unadulterated guesstimates. You got first support right at that X low on the nose at 142, 143, but it really has the potential to continue, and it should continue. Oh yeah, now we're into
Yeah, I'm saying this is just something, that is been discounted, and it's something to take a look at. You can see by the Fibonacci's that there's a trap door on it as well, and that's the risk. Yes,
and that's a big trap door, because my fibs are going to do, they're showing exactly what Sonny's the Sonny bands were telling us, that hey, if it starts to break, it has potential for 62 cents. Well, there you see it right there. But I think that's the level.
Now, Michael, there was one last thing before we run out of time. Put the soybeans up there, because again, the demand for energy could be quite strong, and the supply demand dynamic could be very good because it takes a lot of CapEx to go look for oil. So that's what keeps the supplies possibly tight, because you got China and you got us with the summer, spring coming, and you got companies that don't want to spend money to look for stuff. So that keeps the supply demand. But for farmers to plant more soybeans is not capital intensive, and that could happen very easily. And that's why I was thinking this thing has peaked at 1550, and you could be looking at a substantial drop. Is there any evidence that I could be correct on that?
Right now, it's this is a monthly. Right now, it's hugging.
Yes, right.
Moving averages.
Right.
So
right.
Your first click would be if it drops below that, and we know beans can go in a heartbeat, whip right through it. And there's your levels. We've obviously had this conversation before, because the only one I would put up the levels in soybeans is you.
Yeah.
So we've
no, because I'm just using my periscope to try to find out where there could be some decent value as far as a large move is concerned. And this thing obviously started out, if you go back a few years, like on a a 10-year graph. I mean, the thing started at 7 and 8. And so it went up to like 18, 19, and then or whatever. Yeah. And you can see it's not been able to retest that altitude. No, and like I say, we are going into the planting season. You realize that, the planting season is dead ahead. So if they start announcing that acreage has increased dramatically, and, there's always a wild card with weather, but, you just never, if we went to okay, right now how about if we looked at something like the weekly? What does the weekly look like?
Flat.
Yeah. That's what I'm saying. It's in that decision-making thing. And what about on the?
Here's what I'm going to share with you. Yeah. This pattern, that's corrective. The next move should be down.
And what about on the daily? What about on the daily? What's that daily look like?
The daily, same. Look at.
Yeah, it's premature. It's premature a little bit. Yeah.
It's been there for a while, and they have not. They've gone and tested it.
Yeah.
But they're not breaking it. So on the daily, if it starts to break below, we got the 250 flat as a pancake, which is kind of telling you it's not really going to go anywhere.
Although the RSI looks like it's degrading.
It is. But that's because we've had now 2 days of,
we need more evidence, but it's something to keep an eye on, eh?
Right. I think if we break 1512, and then in turn for 1500, let's say it, 1492, 1487, it's gone. It'll be gone, and it'll drop fast. Yeah. So the thing is, it's like when you've got a rally up and they start to drop past these points of support, it drops fast because the support kind of disappears because of the rally. So it could go fast.
And then you'd on the stock side, you'd have to keep an eye on CF and MOS, which are your fertilizers, and Archer Daniels Midland, ADM, and Cargill. They're the other guys in that business, and so
they're already going. They're already headed lower.
Yeah.
So
that's why I say, it seems like the winds of change are blowing, and
no pun intended.
Yeah. So we'll have to see. We'll have to see, because we know. All right, we're going to hit the top of the hour. We're going to go back to Sunny, and Sunny's going to tell us what's happening at Money Mentor and how to get a hold of her and what she's going to do for you when you get a hold of her. So Sunny, you're up.
Well, thank you, Jim. I'm a mathematician, trader, and programmer. I've been trading professionally for 42 years. I love to coach people and help them learn to trade or better their own trading skills. And I'm an easy language programmer. I have a live trading room on Tuesday mornings and Sunny side of the street every Sunday night, going over 15 markets and what I see Sunny bands doing with them. And I have a free podcast called The Sunny Harris Show.
Okay, and they can check that out by going to your website,
moneymentor.com. Yep.
Okay, that's perfect. Michael, again, how can we get a hold of you there, and what are they going to find out when they do?
Okay. Again, the websites are TradersHelpingTraders.com and LogicalSignals.com. And primarily, if you want to get a hold of me, email me, Michael at mjf_partners.com. And I always answer my emails. And again, I also have a trade room. I also provide daily updates on the S&P 500 and the NASDAQ 100, both the futures, and I have coaching. So, and I've got some things in the work, but I'm not going to go out and spill the beans just yet. But I have reconnected with my first teacher and in Elliott, and his name is Dan Ascani, and he and I have published buckets, and I hold him fully responsible for turning me into the gold bug that I am. So I got a lot of stuff in the hopper getting ready.
Oh, that's perfect. Okay, guys, as far as Option Professor, OPTION, professor.com, there's 3 things I can do for you. One is a PDF on protecting your portfolio against declines as well as upside surprises, which we've had in the last 90 days. You could have hedged yourself against that. And number 2, our best stocks by sector. And finally, a one-on-one review online with me where we go over our ideas that are working and review yours as well. So that's optionprofessor.com. Put your stuff in there and I'll talk to you then. All right, guys, we had a great show here and a lot of stuff I think is very interesting is energy and agriculture could be quite interesting looking forward. David, I'm sending it back over to you.
All right, fantastic. Thank
Thank you, guys. Yep.
All right. Yeah, thanks everyone. Great discussion again. So just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube and your favorite podcast app, and now also on Substack. So, and then you can also just go to TimingResearch.com to get access to any of the shows or events that way. We had a huge event, what was that, the week before last, where we did almost 30 presentations on the theme was Tech Wizards. So all platforms and apps and indicators, that sort of thing for trading and investing. If you missed that, just go to TimingResearch.com and you can scroll back and find the archive for that. A lot of good presentations there. So just want to thank my guests again for today. Sonny Harris of moneymentor.com and Michael Filighera of logicalsignals.com and tradershelpingtraders.com and the Option Professor of optionprofessor.com. Thanks, everyone.
Thank you, David.